Hey, this is Matt from InvestiQuant. Today is Tuesday, February 23rd, 2021. This morning, we saw the markets gap down sizably after this recent pullback that we've been seeing in the markets. And after that, we sold off initially from the open, but we have bounced hard and we are currently trading up near the highs of the session. We're trading above the open in the S&P and in the NASDAQ at the time of this recording. That is not quite the case for the Russell or the Dow, but we kind of have reversal patterns shaping up here as we approach the close this afternoon. So what I want to do is take a look at that type of pattern, and it's going to be specific to what we're seeing here in the S&P and the NASDAQ, which are the charts on the left. I've got the S&P on the top left, the NASDAQ on the bottom left, and you can see we have rallied hard off of the lows, and we are trading above the opening prints from this morning, starting to go green on the session. So let me go ahead and hop into Discover and set up this pattern we're going to be looking at. So I'm going to select all four instruments, and like I said, this is currently only applicable to the S&P and NASDAQ, and we won't know for sure if it's going to be applicable until we get to 3 o'clock, because that's the time I'm going to use for the entry here. So I've got 3 p.m. as a long with an exit set to 4:15 p.m. Eastern time. Now, to describe this price action that we're seeing, I'm going to say that we are currently trading above the open. And like I said, that is currently only true for the S&P and the NASDAQ. Next, I'm going to say that the open was in the top half of the intraday range. So I'm going to come to this open versus intraday range, and I'm going to put open in the top half of the intraday range, and that means at least 50% of the daily range is below the open. When I put that in combination with the close above the open, that means we've got a tail forming on the daily candlestick. That's kind of what that looks like. And then lastly, I'm going to say we haven't quite recovered back to yesterday's trading range. We haven't made it back to fill the gap from yesterday. So I'm going to say we're currently trading below yesterday's close. And I'm going to do that in the intraday close versus daily levels. I'm just going to scroll down. I'm going to hit equals next to under prior close. So that means the 3 p.m. price is below yesterday's close, but it is above the open, and the open was in the top half of the intraday range. So that's the price action that we're seeing there. Lastly, I'm going to put it in a similar market environment where we are below a 10-day simple moving average, but above a 200-day simple moving average. Now I'm going to hit view results. All right, and here we go. These are the results of going long at 3 p.m. Eastern time, exiting at 4:15 p.m. Eastern time, when you are trading above the open, but below the prior session's closing price, and the open is in the top half of the intraday range. So again, that's forming like a green hammer-like candlestick or something to that effect, where the current price is below the prior day's closing price is what we're looking at here. And this is taking place below a 10-day simple moving average, but above a 200-day simple moving average. So the pattern is fairly rare in the S&P. We've only got 18 samples to examine here for the S&P. The NASDAQ is a little bit more common at 33 samples. The Dow, 28 samples. The Russell, 28 samples. And those two are currently not set up like the NASDAQ and the S&P, which are seeing this pattern take place right now. When we look at the win rates, you'll see the S&P has a really strong win rate there. 72% have continued higher in that last hour and 15 minutes of trading. But again, this is only on 18 samples, so that is not a large sample size, and win rates can get skewed when you get really small sample sizes like that. The NASDAQ is a little bit more neutral, 45%, the Dow 53%, and the Russell 32%, so we're kind of all over the map here with this pattern. I'm not seeing agreement across the board. We've got a really strong win rate, we've got a really weak win rate, and then we've got two that are kind of just above and below 50%. So definitely not seeing consensus there across the different instruments on this pattern. If we look at the average win and average loss, average win is larger in the S&P, it is larger in the NASDAQ, it is larger in the Russell. The Dow is the only one that the average win is smaller than the average loss. And the one thing that does kind of stand out, just eyeballing the equity curves here, you can see in recent years, it looks like it has been a bit stronger. In the blue equity curve, that is the S&P. You can see it's kind of been straight up for the past handful of years. And if you look at the stats below, you can see last 8 samples, 7 of them have worked over the past 10 years. You've got 14 samples, 71% of those have worked. With the NASDAQ, let me just click on that real quick as well, since that one was potentially in play. Here's the NASDAQ equity curve. It's similar to the S&P in that it has been really strong in recent years. Before that, it was not all that strong. And if you look at the last 5 years or so, it looks like 9 out of 12 of them have continued higher. If you go back a little bit further than that, the win rates become more neutral. So overall, it is a mixed pattern. I'm not seeing real strong numbers here across the board. For whatever reason, the S&P has been strong in recent years with this pattern, but it is a very small sample size. So keep that in mind. Good luck the rest of the day, and we will see you next time.